Hello again, and welcome to our look at the upcoming Wednesday, October 22nd trading session. I have the economic calendar in front of you, and for this particular session, really not a lot at first until we get to the MPC meeting minutes. Now, this isn't necessarily a announcement that we're going to get that's going to move the markets directly per se, only because it is more or less an amalgamation of what Monetary Policy Committee members in the UK are thinking. So it gives us an idea of where perhaps the FTSE or the pound could go. So expect volatility in both of those markets, but it isn't like there's a number that comes out and you can react accordingly. You kind of have to just see how that affects the mood of the market, if nothing else. After that, we have core CPI month over month in the United States, anticipated to be 0.2% for the month of September. That, of course, can move the already moving stock markets in the United States. So expect some volatility in U.S. stocks based upon the CPI number. A little later, we do have a significant announcement coming out of Canada, and it is a interest rate decision. It's going to affect the Canadian dollar forex pair and probably not much else. Probably won't get too much out of that, truthfully, but you never know, something could be said. And then late in the day, we have the HSBC manufacturing PMI numbers coming out of China. That affects the total risk-on, risk-off appetite around the world. Again, not something that can be quantified directly, but it does suggest that, certain markets will do better. If it's really good, then stock markets around the world will probably react positively, and of course, vice versa. The first market I'm looking at is the gold market, and as you can see, we continue to grind higher, fighting the 1250 level. We have broken above it during the session on Tuesday, but we are struggling. So what we think is a positive market is going to be an extraordinarily choppy one. Look to short-term call buying opportunities based upon short-term expiration. You can see that the S&P 500 is rallying quite significantly during the session on Tuesday, and quite frankly, we think now it's a call buying opportunity every time we dip. The CPI numbers will influence the market, of course, and if we get a little bit of a pullback and a bit of nervousness, we actually be willing to buy calls. We are willing to buy calls anyway on longer term options, as we think the market has most certainly bottomed out. Looking at the euro dollar, you can see that we fell. We tried to get above 128 and just found that to be too resistive yet again. It appears now that the euro dollar is in fact going to sell off, and we feel that we will head to 126 and then 125. No interest whatsoever in buying the euro at this point in time. And with that, we have taken a look at the Wednesday, October 22nd trading session.